The Fed slashes interest rates 0.5%, that's 50 basis points, and this is the first time they've done this in over 4 years. But what does it mean for the mortgage rates and those poor borrowers out there? Let's find out. Let's start with the basics. September 18th, the Fed cut the interest rates, we know, 0.5%. And this was in response to an easing of inflation. So it's a balancing act trying to offset inflation with not getting into some sort of recession. So now that the Fed sees some sign that the economy is cooling and they've dropped the interest rate, what does that mean for you as a consumer in terms of housing prices and, of course, mortgage rates? So when the Fed does lower rates, it means that costs for consumers are reduced. Your credit card interest rates are reduced, and ultimately your mortgage rates go down as well. There's no direct linkage, but they do work in parallel. Of course, in the mortgage market, it means that the cost of borrowing is less, and presumably that means a buyer can buy more house because the cost of that mortgage is less. So for homeowners, of course, this is good news. If they refinance, they can lower their current mortgage rate, but if they're out in the market purchasing, they have more buying power. The same amount of loan now costs them less. Now, it could mean, with inventory still remaining low, that we're going to see pressure on prices up. So it's a double-edged sword right now. We're not quite sure which way it's going to go. Now, the lower mortgage rates, are those buyers going to jump into the market? Perhaps they do. And this is going to put pressure on already high prices if there's not more inventory to offset. So the real name of the game is, in solving the housing crisis and making more affordable housing available, is availability of more inventory. Otherwise, we could see house prices go up, and that's not good news for the buyers. As more buyers compete for the existing housing stock, it could mean for sellers that they see pressure on prices up. Now, it depends on the sellers where they think the end of the game is near and they're not going to see a whole bunch more appreciation on their homes. So it's a real juggling act. Are we going to see a lot of sellers go, now is the time, buyers are able to purchase a little easier, so we're going to put our homes on the market? That would be a nice scenario because we'd have more of a balance between sellers and buyers. What about mortgage holders and refinancing? Well, lower mortgage rates could mean that buyers out there who have already purchased and got their mortgage in place at that higher rate are in the market for a refinance. But we're only talking about 0.5% interest-wise. So is it worth the expense in refinancing? Because even though you might get a lower payment, the costs of achieving that lower payment include title insurance, costs for the loan, points maybe, and so on. And this can add quite a big cost to your refinancing, and you have to factor that in to your payments. It could mean that you're better to just stay status quo and wait for an even larger rate cut later on in the year. Always crunch the numbers to make sure that that refinance makes sense. A lot of the mortgage brokers out there starving for business are going to be really pushing lower interest rates and the ability for you, the borrower, to refinance. And of course, remember, a lot of the mortgage rates right now have already priced in this 0.5% even before it arrived. That margin between the federal interest rate and the mortgage rates, that margin had skinnied up in recent months. So we're looking at mortgage rates right now in the 6s, approaching the 5s. We're hoping to get to the 5s before the end of the year. So while the Federal Reserve's rate cut is a welcome for consumers out there, and with mortgage likely to go lower, that's good news for the borrowers out there. But it's not good news for borrowers if the inventory doesn't follow suit, and that's where the sellers have to play ball. They've got to bring their homes to the market so that those buyers can purchase them. Otherwise, we're going to be in a situation where we're going to see house prices continue to rise, and that could be an offshoot of this rate drop if we don't see more inventory. Click on the video that's on your screen right now so I can keep you up to date with all the changes in interest rates, home inventory, and all those factors affecting you and the real estate market. We'll see you on the next video. The Room.